there were so many deals happening where it was like after eFishery started succeeding, where everybody was like, I want to do the eFishery for X. So eFishery for chicken, eFishery for beef, eFishery for whatever. And so everybody was talking about the same thing. And the concept was, yes, it's asset intensive, but by going verticalized, by going multi-stage, we get margin for every slice of it, and we make the whole thing more efficient compared to the incumbent conglomerates that are too large and too bloated.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave.
Hey, Adriel.
Hey, Jeremy. Good to see you again. We had a lot of feasting over the Chinese New Year.
Yeah, I know it was like the whole Christmas and New Year season, then the Chinese New Year. I gained 5 kilograms for the Christmas season. Now I just lost 5 kilograms.
Yeah.
Just to slowly kill all carbs. But I guess the eFishery thing, both of us, you and I were discussing this very early on. And we had some inklings very early in the crisis that this was the magnitude of the issue.
Yeah.
And it looks like it's gotten worse actually since then. But maybe let's just recap. So eFishery obviously turns out that the allegations are they were not just doing embezzlement, the official reason, but the District Asia and the public press has broken the news that they've inflated initially 20% of revenue and maybe close to 80+% of their revenue is basically fraudulent.
Yeah.
Obviously, that needs to be done and reviewed for evidence and so on and so forth. But I think on the face of it, I think it seems quite straightforward that these are serious allegations and these are easily provable. And if they have a forensic audit report, I think it's quite hard to contest, actually. In my head, probably more likely to be guilty, innocent now at this stage. So I think that's the tricky part. What are your thoughts about it?
Yeah, I'm not going to be one of those VCs that say, oh, totally knew it all along, blah, blah, blah. The truth is, I think internally, I was always quite interested in the aquaculture. And obviously, we've reviewed many of them together. There's like Aruna, Fishlog, eFishery. No, eFishery we didn't, but we've always talked about it. And we were always wondering, how did it get so large so quickly and raise so much institutional capital? Like, what's the secret sauce? We always had that adjacent conversation, but never really focused on it and drilled deep into it. And then I think part of my curiosity led me to talk to some of my Indonesian friends and ask them, what is the Indonesian aquaculture market like? Is it driven by people eating more fish in the next 5-10 years and that rising middle class? And I think, when we looked at the different, say, poultry, seafood, vegetables, rice, obviously I think aquaculture is interesting given the sort of supply chain dynamics that it had. I think the distributors apparently had much larger margin than distributors in other verticals, which made aquaculture distribution plays like eFishery interesting to many people. And then even the sort of SKUs and the range of it in aquaculture versus say like chicken. The chicken is the chicken. There's maybe 6 or 7 different types of fish that people want to purchase, eat. And then obviously I think in chicken, your cost of goods is more controlled because, you have really large players like CP and Jaffa that control a lot of your key inputs or day-old chickens. Whereas I think in aquaculture, say you have tadpoles, and that's probably more fragmented, which gives you a lot more power and ability to play around with your cost of goods. And probably that leads to much better margins overall. So to me, aquaculture always seemed like a nice vertical to make a bet in if we went for one of those Indonesia Agritech plays. I will be curious to see how the other aquaculture players, I guess it's still like Aruna and Delos that's still in the race. Yeah. What about you? What are your thoughts since you have also had some musings about eFisheries over the years?
Yeah, and I think we want to discuss this because we were both looking at this space together. And so we never did an after-action review because some of the listeners were like, hey, Jeremy, did you know? Because Adriel and you always complain about fraud in the Southeast Asia ecosystem. And I was like, it's funny because I don't think I knew specifically, but it is also true that there were so many things where we just never put 2 and 2 together. I think we've done multiple episodes where we complain about fraud and the amount of fraud that we've seen in the due diligence process together and looking at startups in Southeast Asia. So I think that's one track. And I think the other track was that you and I were looking at Agritech, and like you said, there's so many things that are positive about it at face value. I think conceptually several years ago, the story is, like you said, rising middle class, they want to eat more fish, more chicken, more products. Indonesia is primarily a strong agricultural sector that's servicing its own needs. There's a lot of waste, which is true. Farmers are not productive. A lot of it is skimmed off by middlemen. A lot of shrinkage, in other words, waste, because they don't have the right refrigeration or points or intermediaries. It creates this conceptual underpinning for an end-to-end verticalized conglomerate for certain aspects, fish or chicken. And I think that's where over the past few years, and I think you and I have seen that, it was like there were so many deals happening where it was like after eFishery started succeeding, where everybody was like, I want to do the eFishery for X. So eFishery for chicken, eFishery for beef, eFishery for whatever. And so everybody was talking about the same thing. And the concept was, yes, it's asset intensive, but by going verticalized, by going multi-stage, we get margin for every slice of it, and we make the whole thing more efficient compared to the incumbent conglomerates that are too large and too bloated. So that's what they were saying. So I think we looked at it together, and like I said, the rumblings that I had was I kept asking in the meetings, okay, they're saying they're eFishery for this, but what's so special about eFishery? And then I kept asking the question, and it's like what makes, because it's a metaphor. When you say eFishery for X, you're saying like amazing magic for something. Because it happened, it used to be like Uber for massage, Uber for, I don't know, groceries. Because where the metaphor breaks down quite quickly is that if I told you, you'd be like, oh, the magical product is, McDonald's. And I was like, yeah, I love McDonald's. And you're like, McDonald's or trash? And I was like, wait, it doesn't make sense. Why does the McDonald's or trash work? Because McDonald's is about good brand, tasty food. Because that's what your brain is. And then you're like, but trash doesn't make sense. So I think metaphors break down very quickly if you're like, but of course, I think there's a magic of investing. Is actually, if you say McDonald's for something, then the story can become much easier to swallow, which I think is the tricky part. So you and I did have a conversation with eFishery for X. And then I asked that question, what's so special about eFishery? So you want to recount some of the conversations we had about what made E special?
Yeah, man, I think there was some sense that the aquaculture margin profile was much healthier than, say, other commodities or poultry. And then, of course, Indonesia has established conglomerates and players really in different parts of those supply chains. Everyone always talks about the almighty Chapfa and CP, for instance, in the chicken vertical. And then I think in agriculture, there's probably other local mafias as well who control the supply chain at different points. Whereas I guess in aquaculture, there was some sense that supply chain was much more free and easier to play around with. There was arguably some level of efficiency gains with automated feeding system. I guess maybe it's because it's in the ocean, so you can see as well, compared to, say, in a chicken farm where it's more visible. So there was some argument that there was a technological use case and enablement there that then led to the ability to be the distributor for a lot of these farms. And then I guess probably from a ESG perspective as well, it's exciting because I guess aquaculture is perhaps less pollutive than, say, cows, less fluctuation, say some of the vegetables which are more perishable and easier to get defeated by the weather. So there was different reasonings that different people shared with me over the years, which I thought were fair. And the truth also is that people have asked me to go to Semarang or like one of those fish farms, right, to go and check it out at some point over the last 2.5 years, but I never really made the trip out to visit a fish farm and to really understand that life cycle and the value chain, how a company plays there. I didn't really have the best sense.
And I think what's interesting is that together we've done the due diligence on so many agri-tech companies in Indonesia. And I think the easy part is, there is a lot of waste or inefficiency in a farm by nature. It's a smallholder farm cannot be as efficient as a large farm. And a large farm that has technology with lots of smart people, very hungry to make things better, obviously are more efficient. I think what gets tricky, and you and I have done this, it's hard to track the financial flows of the farm because it all becomes cash at some point, which is, I think, the big difference between the other companies we've done, our SaaS companies that looked at, and all these other companies. Quite straightforward. The due diligence is like, boop, it's on strike. And then the argument that you have is the contract starts in April or start now. But I think for these agri-tech and all of these tech-enabled businesses, it always ends up in cash. And the cash is always reconciled on a weekly or monthly basis, which makes it impossible to audit at some level.
Bank accounts as well. Yes. Right now we're both like COO, so we have a sense of how many bank accounts you need to operate when you have all these different operations. I've been a big fan of the treasury management startups playing in this space just because like financial visibility is actually really hard. Even if you're a software company, much less like a company with numerous operations across the entirety of Indonesia. Yes, I think some of my investor friends probably found it hard to complete 100% diligence as well. You can prove that maybe 10 out of 100 farms exist and are functioning, but it's very hard to prove 100 out of 100 at that scale. So yeah, I think figuring out how to effectively diligence such operationally heavy companies will be a key issue moving forward in Southeast Asia.
Yeah. And I think, it's a good reminder that obviously you need to have on the ground folks who are doing the due diligence and people who have a high reputation of integrity and diligence work. I think the tricky part, of course, is obviously I think people have shared, I think definitely a chilling effect on investments. I think especially I would say in Indonesia and Vietnam, I would say Singapore is like less exposed but still being impacted, because when I talk to my American VC friends, they look at Southeast Asia as a whole. So they're like, Singapore's part of it, just the Indonesia screw up. So to them is they're like, whole thing got pushed down, but Singapore's a little bit less pushed down than the rest. But I think Vietnam and Indonesia definitely a chilling effect on the whole Agritech and real economy startups vertical for sure on the growth station back.
100%. I think the beauty of Singapore has always been the companies that expand to the US, and that's a corridor that we've always watched really closely. The B2B SaaS companies that moved out there, and we've seen several of them quite well, whether it's Niam or Pats. I think even Open guys very early proved out that corridor with their exit to Zendesk. I think that will continue to grow and succeed. And obviously with AI, there are a lot of Singaporean founders who are super excited to just move out to the Bay Area and build straight out. I agree with you. I think it's not lost for Southeast Asia, especially some of the markets which have not been hit with reputational issues. But from a 5-year perspective, it's all about macroeconomics, right? We talked about this numerous times before. On some level, that behavior is also a function of larger structural economic societal issues. And we can only hope that gets better as economies progress, the politics get better in the country.
Yeah, and I think it reminds me of some of the warning signals that we actually had discussed about eFishery, but we never put them together. So I think one was we never really felt, or at least I kept asking over and over again for 2 years, and I figured out the secret sauce of eFishery. And turns out the secret sauce is fraud. And then the second part was that we had identified the departure of the CFO. Remember we discussed that quite early on, because I had flagged that the person left about a year. And to me, when the CFO comes in for a year, pieces out after a year, it's kind of like Zilingo as well. Then it's normally a very bad sign, because it means that they sell something that spooked them, because normally they should know going in. And the third signal, of course, is that we've always encountered a lot of fraud in the Indonesia kind of like ecosystem, which is a function of some of the financial due diligence slash like culture. And obviously we also know about the pressure that startup founders have, feeling like they have to report very high numbers. There's an incentive to conduct fraud versus a family business where you're just like, it doesn't matter. So we had all those things, but we just never, put them.
Actually, the incentive structure is so fascinating, because a lot of like family-owned businesses, or say where management owns majority of the company, it's supposed to be cash flow positive, you're supposed to get dividends. The incentive is to make sure that you get a certain level of profitability, so you get to enjoy your dividends. And so I remember one large Indonesian company manager was telling me his company was like burning a couple $1 million a year for the last 4 or 5 years. And he just could not understand why, because the business model and the economics for that industry was actually quite favorable, monopolistic, duopolistic-ish. So he went in and he realized there was a lot of trim it under the table, kickbacks, whatever. It can be things like, let's say we need 10 gig workers or something. They recorded it as 100 and it took arbitrage between 100 and 10. It could be things like renting of equipment, renting of office spaces, just massively inflating all those numbers. So that guy in-housed a lot of things. And then within 1-2 years, that company turned profitable. Whereas like the incentive of a venture-backed company is to always show that top line growth rather than that like bottom line profitability. So yeah, I think there probably needs to be some perspective change of how to achieve.
And I think there's a good point that you have, which is a lot of Indonesian companies go in-house because when they start having that relationship with the external party, that external party needs kickbacks and all kinds of stuff to make it smoother. And so there's an incentive for Indonesian companies to verticalize and eat their own even suppliers, because at least if you're doing your trimmage internally, it's just a bonus for your employees, which is a form of retention. You know, but at least it goes to your own people rather than to somebody else. And I think that's a consistent truth for not just obviously Indonesia, but for a lot of emerging markets that have that same culture where they're like dealing with a culture of kickbacks and bribes.
It's also even things like organization design, because I think someone was telling me that in one of the companies that they supported, initially the margins were quite bad and they had to separate out the team that goes out and looks for suppliers versus the team that chooses which supplier to give the orders to. The problem when you put those two things together is the person who finds the supplier and the person who chooses the supplier, the incentives are actually very disjointed, because if I'm the one who gets to choose which supplier to give orders to, I would choose the one I'm super buddy with, then I have less incentive to go and find other suppliers to increase the competition with the supplier that I really like and might be giving me kickbacks and inflating the cost to the company.
Yeah, and I think that's a very big control risk. I think we also saw that in Indonesia, where I think it's like sales teams as well, for the close contracts. They do the opposite, which is they give out bribes. And then it was just like, what? It's just like a cultural issue where it's endemic, and it's not a startup, it's more, it just exists. And then it's just contaminated by the same issue, but supercharged.
I guess that's the beauty of software companies, where you're supposed to have operating leverage and you can keep teams lean. You can select and be biased towards the sort of people that you bring on board. Whereas like if you are running a massive operation, like the quality control on people, their integrity just becomes like way, way hard. And I think that should also be a factor of consideration for investors.
I think what's interesting is that we've seen a lot of international founders peace out from Indonesia because they can't deal with that culture. Like, I think I definitely know quite a few founders, about 4 to 5 of them, who have explicitly told me like they peaced out of Indonesia because they couldn't deal with the culture of kickbacks and bribes, because they felt like there's a moral aspect of it, but also there's a kind of like work reputation, because it is a real thing, which is that you have a long career in the future, potentially in MNCs or as a leader. Why do you want to taint yourself with this kind of like small level stuff? You can screw up your whole career, right? So I think that's a good example of people who, I think from my perspective, make the right decision because they say, I'm thinking about my long-term career, but it's also because they have a long-term career at and other places, alternatives. Whereas I feel like a lot of some local founders I talk to privately feel like they have to do it because everyone else is doing it, which is weird. I don't know. I feel like my mom is like saying, hey, if everybody jump off a cliff, do you also jump off a cliff? I just feel like a lot of folks in Indonesia feel like they have to do it because everyone else is doing it.
You just can't fight the very like embedded like culture of how business is done here in a very traditional manner. It's not in the tech and startup way that you see in Silicon Valley, for instance.
And I think where that kind of comes to the next point is, what do you think is the future for Agritech in Southeast Asia, Indonesia, at least for the vertical, I would say?
I think we're starting to see small cap private equity players look at some of the Series A, post-Series A type of Agritech companies. And it makes sense because the eventuality of all Agritech players is to be some form of a mini conglomerate. And I still believe that if you can build out that flywheel across your inputs, your offtake, your financing, the fund monitoring services and all that, you can be a very strong lock-in for a lot of the farmers. It becomes very hard to switch out from you. And that obviously makes it attractive to certain types of investors like private equity. Just that they won't come in or buy out the business at technology multiples or venture capital multiples. And they will also run a very fine tooth comb across the business and uncover all sorts of things. So I think that's the game that people need to think more about moving forward. There's also like an interesting reset. The most well-funded player going bust gives a lot of leg room for your player number 2, 3, 4 to stay catch up. I think we saw that sort of reset happening in the FMCG space with the Buku Warong, Bukas, Ula, which have raised massive amounts of capital going out of business. And that leads to interesting new players coming out into the market like Basket. And those players tend to have, because of how burned investors have been and how high the bar is now for investors to invest in that vertical, they also hold themselves to a much higher standard of operating and also conducting business with their customers and suppliers.
Yeah. I think two things that come to mind based on that is I agree with you that I think this kind of story is really important because it puts the fear of God into everybody because everyone's like, fuck, someone got caught and they got beaten by a big stick. And everyone's shitting on them and everyone's like, okay, I better not do that. And I think like it or not, this kind of story is part and parcel of every emerging market. And I think it's going to be a big point for a lot of founders. I think those who are ethical founders will stick around. And then those who are unethical will just say, you know what, let's not do this and let's do a different way of whatever they want to do. And those people who are on the fence will be like, okay, it's better for me to stay on the good side. So I think actually you gave a really good example of like the warung, which is the kind of like what we call like the small holder, seller, intermediary space. I think we've seen a lot more efficient players come out as a result. So I think, in the Agritech space, for example, in fish farming, there's Delos is still around. I think they're still pushing hard. Never know. I think one thing I want to say is that I do really respect the eFishery board for pulling the trigger and doing the report and kicking out the founders because eFishery still has a lot of runway left. They have years and years of runway. And obviously, I think there's going to be a lot of hard work that needs to be done, which is going to be tricky to do. But I think the question now is, do you think they're going to become like a Luckin Coffee? I'm just giving an example because they, I think, had the market position and the leader position, but they still have it. They still have runway. So technically, you can imagine a scenario where they clean up shop, they just focus on fundamentals, they bring in the right executives. Maybe the outcome won't be as big as what people thought it was going to be, but it could still become a big player and still be a big player. So I think respect, to the board for pulling the trigger, making the call while there's still time. Because I think we've seen the other way around, which is happened way too late. And then the whole company has to fold, which is the worst position for everybody.
Someone was telling me about a company that went through like $20-30 million in a year. And the board was like notified about how how abnormally high burn the company was. And then the board ignored it. And then now they're just like rushing to try and salvage the scraps. So that is true. I think you talked about it in previous podcasts before, capital as a moat. You can actually do a lot to sort of money in the bank and build sort of moat around it. But I think hiring a new management team, executive team, non-trivial. You and I have both hired like people before, tried to hire executives as well. It's going to take a long while, and I'm just not sure if there will still be a business after that process is done.
I wrote that article. You reminded me about capital as a moat. And now I feel like I have to write a sequel to it. Because I think capital as a moat does actually be true, which is that there are returns to scale from being the number one player. And by becoming the largest player, you get to squeeze everybody else. And therefore, capital can anoint the future king and can be the kingmaker. The problem is that, and I think my reflection from the time I wrote that article till today, now that I think about it, so thank you for reminding me about that article, is that the people that were anointing as kings are not as mature and they don't grow up fast enough to be kings. So they end up being, I was going to say tyrants, but tyrants is at least potentially competent, like more like foolish or like they're wasting the money. And I think it just creates that really bad situation where, like you said, the executive team, but the CEO and the founders, I just don't have enough, sophistication and maturity to spend the money, which is the problem. Right? No easy answers. Hopefully people spend money better if they get anointed as a king. But I think people are just going to anoint less kings.
I think that's the unfortunate truth. They always say venture capital, so much of it is like choosing the right people and founders. People also tell you that people change, right? From the time they have $0 in the bank to like when they have $10 million in the bank. The temptations start to emerge. People start to play shorter term games because they don't think they can get further than where they already are today. I think assessing people is tough and it's a very continuous thing to do.
I think the thing about the US is that people think, people are anointing these young people. But the truth is a lot of the people who are raising money are people who have done it before, So the people who are raising lots of money is like example. He's raised money so many different times. He's built a track record. So when people give him money, they know exactly what he's going to do with it. So I think there is actually in Silicon Valley a professional class of founders, repeat founders or repeat executives. But people know, they've done these 7 experiences at different startups. So we know who they are. And when I was visiting my friends in SF, they had done stints, 4-year rotations at different startups. And so they were like, they're like a known quantity.
Yep.
They're playing a long-term game with long-term people. So actually investing in them or putting money in them is not really as high compared to putting that money into a fresh university graduate in Southeast Asia who doesn't have that track record, who has not gone through that rotational programming. So I think it's a different feel to the talent quality.
Yeah, it's just hard to find people who have seen temptation and then reject. Not everyone has that benefit of going through those experiences. And then I think as investors, like spotting that type of proven talent becomes very tough in this part of the world where it's still fairly.
Yeah. On that note, let's wrap up. What's one positive hope that you have for the future? Out of this whole debacle?
I think with every fraud uncovered, there's one less playbook to play with for those who are thinking about committing fraud. The truth also is that it's very hard to blame the eFishery investors when you read the Deal Street article and you realize that actually it was a very elaborate scheme and structure. The money flowed through numerous entities, and you really had to be intentional to say, hey, I think this company is fraudulent. Let me engage the forensic consultant to go and run the numbers, trace the financials all over the place. I'm not sure if a normal financial due diligence exercise at, say, a Series A, where you want to close it in 3 months so the founders can go off the business, is sufficient. And then let's say you raise a large Series A, you have 3-4 years of runway. How did the board impose or bring in proper control measures to really understand portfolio monitoring? Because a lot of portfolio monitoring is, let me send out a questionnaire, founders can fill it out. Like, how do I actually cross-reference this with reality? Maybe a quarterly board meeting. It's very easy to just show a very specific sliver of the business to investors and the board. I don't think there are any easy answers again, because American venture capital is very used to investing in software and tech, and they have probably built out a very great playbook on how to diligence fraud in that part of the world. But in this part of the world, I don't think there's really good playbooks on like how to catch that entire range of fraud or misreporting. So I think that is a business in itself, catching fraud.
Yeah, I think for me, the hopeful thing, and it's inspired by what you said, is that I hope that this is also a good wake-up call for, I think, investors as well.
Yeah.
Which is that I think it's not just about investing in the companies that will do well, but it's also about not investing in the companies that... And I think a lot of investors are like very big on the momentum piece. But the momentum piece can really be artificially hyped in so many different ways, ranging from fraudulent to legal, but not business economics justified. And so I think being able to talk through the BS and the press release to be like, what's the deeper call to reality? Which is this a good business or not?
Yeah.
Is the CFO good or not? If the CFO quits, should I do an exit interview with this person to figure out what's going on in the business? There's just a whole bunch of like deeper reality work that these people just have to really do the legwork, and you just can't skip the legwork. And the truth is, there are investors that walked away from eFishery. There are companies and many investors that said no to eFishery as well. To some extent, they did a job by not investing. But I think it's an interesting dynamic where I think it's a good reminder that in retrospect, I think it's good that eFishery imploded, because it's a matter of when, not if. I wish it had imploded maybe 2 years ago.
Yeah.
Then I think a new crop of founders would have come up. So because 2 years ago, I think it'd be less painful to be not a unicorn. It'd be only $100 million. And then everyone's but now I think what people are just surprised by is like the sophistication, like you said, the size.
Yeah.
And I think the big part about why you and I never put 2 and 2 together was just like, you and I was just like, oh, those guys must have caught it by now because they paid for money for big due diligence. So I think we were just like, we were just surprised at the scale of it. We were not surprised by small fraud.
Yeah.
But we were surprised by the audacity of the scale of that fraud.
Yeah. The truth is, there have been much larger frauds like FTX, for instance. So I guess eFishery is large in the context of this region. And then, of course, it's like Invest3 as well. So yeah, I think the bright side and silver lining, as you said, is that talent and I guess on some level capital is now released back into the ecosystem. And hopefully the employees who have seen what happened at eFishery take the positive lessons and don't take the negative parts of it and build much better businesses in the years to come.
Yeah, I think I agree about that. And I think that the people who got the most screwed were the employees. Sorry, but if you're doing fraud at eFishery, fuck you.
Yeah.
Like, what a fucking waste of time.
Yeah.
Really made a giant shit on everybody in the Southeast Asia tech and gave all of us a bad name.
Yeah.
And then to the 10 to 20 executives that were involved in this fraud, also fuck you.
I mean, they probably made some nice money along the way.
Yeah, fuck it, they'll never work in tech again in Southeast Asia. But everybody got shafted. I think, like, I got impacted, obviously, as somebody, but even so, it's less. All the junior employees or the fish farms got massively screwed.
Oh, 100%. Yeah.
It's their livelihood, it's their day-to-day. It's on their resume.
Yeah.
It's just horrible. So I think those guys got really screwed. I think quite a shame. Like, feels like a horrible thing to do.
Yeah. No, I think it puts into question fundamental leadership questions. As a leader, did you really care about your people when you did all those different actions? Yeah, maybe you can argue that you did that to raise money so that you can continue like paying salaries, etc. But longer term, you probably have also scarred their careers and livelihood on some level.
Yeah.
As the fraud imploded.
Imagine if somebody walks into a resume and you're like, eFishery, as an example, head of sales for 3 years, which is total reasonable job. But the first question you're going to ask yourself is just, imagine you go to interview with you, like, were you ethical? Did you conduct any fraud?
Were your sales real or not real?
Yeah, exactly. So this could happen in an interview. Yeah. And then after that, even if you like the person, you're going to be like, oh man, I have to tell my board that I hired somebody, the head of sales from
the branding is
good. Yeah, you'll be like, you know what? I'll just hire somebody who's a little bit safer as a choice. So I just think it's just, I don't know, it just makes life hard. Anyway, so it's just horrible. On that note, peace out and see you next time.
Yeah, thanks, Jeremy. Have a good Chinese New Year.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.